SoFi stock price has grown impressive, surging nearly 75% in the last month. However, my analysis suggests that there's even more room for potential, with the possibility of it increasing 3 to 5 times its current value. Here are my top 5 reasons to invest in SoFi today. Firstly, SoFi presents a compelling investment opportunity, primarily driven by its dominance in the private student loan market, accounting for over 70% of it. While student loans remain central to their business, SoFi operates 3 interconnected segments. To attract new customers, they offer financial services through the SoFi app, SoFi Relay, and SoFi Credit Card. The technology platform powers their business and other fintech companies. The lending business is the most profitable, aiming to make financial services customers more valuable. In recent years, SoFi's personal loan business thrived, but its student loan segment faced challenges when the government suspended federal student loan payments in 2020. This setback significantly impacted their business. However, SoFi adapted cleverly, focusing on personal loans, which generated nearly $3 billion in the latest quarter. They anticipate the pause on student loan payments ending soon, leading to a potential refinancing loan rush benefiting SoFi. The enormous U.S. student loan debt, totaling around $1.7 trillion, offers a substantial potential for SoFi. If even a fraction of borrowers refinance with them, it could boost their profits significantly. Moving on to the second reason to invest in SoFi, we have what they call the Flywheel Effect, or their financial services productivity loop. SoFi operates like a funnel, attracting customers through their financial services like the SoFi app. This customer data is then used to upsell them on more lucrative products like home mortgages or personal loans. Although SoFi has been discussing this strategy since becoming a public company, we are now observing its positive impact. SoFi CEO, Anthony Noto, views the financial services productivity loop as a critical ratio. On the top, they have their appealing, highly engaging financial services products, including Relay, SoFi Money, SoFi Invest, and the SoFi Credit Card. The more customers using these products, the better, as it expands the base for potential cross-selling opportunities. On the bottom, they have their lending products, like personal, student, and mortgage loans. The higher the ratio of financial services products sold to loan products, the greater the potential for upselling. SoFi Relay is a valuable service that monitors credit scores and helps users track various accounts. A common use case is when SoFi identifies a Relay customer with multiple credit card debts and offers them a personal loan to replace the high-interest debt. This approach benefits both the customer and SoFi. When SoFi moves an existing Relay customer into a personal loan, rather than signing up a new customer directly, their variable profit increases significantly from $800 to anywhere between $1,400 to $1,800. This growth in members using financial services eventually translates into massive profits for the company's bottom line. The impressive aspect is that SoFi has established this process sustainably and customer-friendly, avoiding any scammy or predatory practices. The third compelling reason to invest in SoFi lies in its exponential growth and increasing value, making it an attractive option for investors seeking rising stock prices. While assessing a company's value, investors often consider factors like the price-to-earnings ratio. SoFi's current P/E ratio, calculated using adjusted EBITDA, stands at a relatively high 30, even without factoring in costs like stock-based compensation, making them unprofitable by GAAP accounting standards. Delving into SoFi's growth potential reveals impressive expansion prospects. The U.S. retail banking market is projected to grow around 4.5% annually, while commercial banking is expected to grow around 11% globally. However, SoFi's growth far outpaces these estimates, reaching 5 to 10 times that rate. The rapid growth statistics for SoFi further support its potential: 5.6 million members, up 46% year over year, 8.5 million products used per member, up 46% year over year, financial services revenue more than tripled, up 244% in the last year, and total deposits increased by $2.7 billion in 3 months, reaching $10 billion, with 90% of those being direct deposit customers. Considering this impressive growth, it's crucial to understand its impact on SoFi's stock price. If SoFi maintains a 40% annual growth in adjusted earnings, their P/E ratio would be around 11 in 3 years. A consistent P/E ratio of around 11 would necessitate a corresponding increase in SoFi's stock price if they continue growing beyond the initial estimates. For example, a 20% growth would require a 20% increase in the stock price, and a 50% growth would demand a 50% increase. Currently, SoFi generates profits from its lending and technology platform segments, but incurs losses in its financial services segment due to significant investments in acquiring new customers and marketing expenses. However, reaching a positive variable profit margin in the financial services segment is a significant milestone for the company. As they cover customer acquisition costs, each new customer will contribute to higher profits, leading to continued growth and increased revenue. This will likely result in a higher stock price when considering valuations like the PE ratio, assuming the growth isn't already reflected in the current stock price. SoFi's disruptive potential in the finance industry makes it a compelling investment. With over 500 million legacy bank accounts lacking easy money transfers and personalized recommendations, there's a vast market opportunity for a customer-centric company like SoFi to attract these customers. Their long-term vision revolves around helping members achieve financial independence and delivering top-notch services, reflected in their consistently positive ratings on platforms like the Apple App Store. SoFi continues to expand its features, offer comprehensive banking services, and aim to be a one-stop shop for banking. Strategic moves, such as acquiring Golden Pacific Bank, adding crypto trading, and implementing a rewards program with free stocks for good loan customers, set them apart in the field. The technology platform, their third business segment, is crucial to their vision, as they now run their tech infrastructure to support various apps. SoFi's ambitions extend beyond their own apps. They aspire to become the fintech industry's AWS, providing infrastructure to other fintech companies. With their banking license and technological capabilities, SoFi offers various services to other fintech companies, such as natural language AI chatbots, a payments risk platform to detect fraud, and a buy now pay later service with unique economics. In this newly emerging fintech web hosting market, SoFi has limited direct competition due to the exceptional quality of their customers. Unlike other platforms, SoFi's average personal loan borrower has a yearly income of $164,000 and a FICO score of 747. In contrast, their student loan borrowers earn an average of $173,000 with a FICO score of 769. SoFi caters to young, high-earning individuals who will likely continue advancing in their careers and earning more money. Their customers are financially stable and consistently growing their wealth, which is a significant advantage for SoFi. As a result of having a financially prosperous customer base, SoFi's position is akin to that of Apple in the tech industry. They offer premium products and services, creating a walled garden ecosystem that encourages customer loyalty. SoFi aims to get as many customers as possible to use its platform for direct deposits, as it serves as the entry point to their extensive array of financial services. Currently, SoFi averages 1.5 products per customer within their ecosystem, but this is expected to increase as they continue to cross-sell additional services. While SoFi does have competitors, they are less of a concern currently, given the vast potential offered by the hundreds of millions of legacy bank accounts waiting to be captured. SoFi's unique market position and future prospects make it an attractive investment opportunity, and many investors are optimistic about the company's bright future. As with any investment, the exact amount one chooses to invest in SoFi shares may vary. However, with the company's promising outlook, some investors are considering a heavier investment in SoFi as they believe its future looks increasingly promising. If you've invested in SoFi, feel free to comment on your average purchase price for the shares. Thank you for watching. This is Nate, and see you next time. Want to know SoFi's secret? Check it out here in this next video.